What's up, traders, and welcome back to Explain the Charts. Today is October 19th, 2025, and we are taking a deep dive into the USDCAD currency pair, which is sitting at a fascinating crossroads. We're going to break down the powerful fundamental news stories driving the market, primarily the ongoing U.S. government shutdown and Federal Reserve rate cut expectations. Then, we'll get into the charts to see what the technicals are telling us about potential future moves. First, let's talk about the macro environment, because the US dollar is under some serious fundamental pressure right now. The main story is the prolonged US government shutdown, which is creating significant economic uncertainty. This situation has fueled massive expectations for a Federal Reserve rate cut at their upcoming meeting this month. In fact, according to the CME FedWatch tool, the market is pricing in an almost 100% probability of a 25 basis point cut. Compounding this issue is the fact that the shutdown has delayed the release of critical economic data, like non-farm payrolls. This lack of data effectively ties the Fed's hands, making a cautionary rate cut even more likely to them. On the other side of the pair, the Canadian dollar is receiving mixed signals. Strong recent employment data for Canada has been a source of strength for the loonie, reducing the need for the Bank of Canada to cut rates immediately. However, this is being offset by declining crude oil prices, which typically weighs on the commodity-linked Canadian currency. So we have a fundamentally weak US dollar versus a Canadian dollar with its own conflicting drivers, creating a complex picture. Now, let's pull up the daily chart and see how this has translated into price action. Looking at the bigger picture, you can see a major trend reversal that started back in early September. After bottoming out, USDCAD began a very strong and steady uptrend, climbing from below 1.35 all the way up to our current levels. This multi-month rally is the technical reality that is fighting against the recent bearish news for the dollar. The most significant technical event recently was the break above the major psychological level of 1.4000 around October 9th. This level, which was once resistance, has now become the most critical support zone for the market to hold. As you can see in the last several candles, price action has been consolidating right above this 1.4000 mark. The daily candles have become smaller with long wicks, showing clear market indecision, which perfectly reflects the clash between the bullish trend and the bearish news. Let's zoom in a bit on this recent price action since the beginning of October to get a clearer view of the key levels being established. As we can see, after breaking 1.4000, the price pushed higher to set a peak on October 14th at 1.408. This level now serves as our primary short-term resistance. Notice Friday's candle from October 17th. It was a bearish candle that closed lower, reflecting the selling pressure from the shutdown news finally starting to make an impact. That day's low tested down towards the 1.4000 handle, showing just how important that support is. To get an even better sense of last week's battle, let's switch to the 15-minute chart. Here we can see the price action in much greater detail from the 14th through the 17th. Price made a strong push up to that 1.4080 high on Tuesday the 14th. It then consolidated and retested those highs again on Wednesday and Thursday, but failed to break through. This failure to make new highs was a key warning sign. Then, on Friday the 17th, you can see a clear shift in momentum as sellers took control, breaking the price down throughout the London and New York sessions. The price found some initial support around the 1.4025 area, a level mentioned in several news reports, but the selling pressure was strong enough to push it all the way down to test 1.4006 before finding a floor. The bounce off this low into the close shows that buyers are still defending the 1.4000 area fiercely. So, let's go back to the daily chart and recap what this all means for the week ahead. The battle lines are clearly drawn. Your key support level is the psychological 1.4000 handle, with a secondary support right below at 1.3980. A definitive break and close below 1.3980 would be a very bearish signal and would likely indicate a reversal of this uptrend. Minor support sits at 1.4020. To the upside, immediate resistance is Friday's high around 1.4067, followed by the major resistance and recent peak at 1.4080. If the bulls can break past that, the next targets mentioned in analyst reports are 1.4112 and 1.4144. Now for the potential scenarios. The bullish case relies entirely on the 1.4000 support holding strong. If the market looks past the fundamental noise and buyers defend this level, a retest of the 1.4080 resistance is very likely. A breakout above that could trigger a squeeze, especially since retail sentiment data shows 75% of traders are currently short. I would place the probability of this scenario at around 60% if 1.4000 holds firm in the first half of the week. Conversely, the bearish case is backed by powerful fundamentals. The shutdown and looming rate cut are significant headwinds for the US dollar. If there is no progress in Washington, a breakdown below 1.4000 seems almost inevitable. A daily close below 1.3980 would confirm the reversal, with targets opening up much lower. I would put the probability of this at 40%, but this likelihood will increase every single day that the U.S. government shutdown continues. The most important thing to watch for next week is any headline out of Washington, D.C. regarding a potential deal to end the shutdown. A resolution would likely cause a massive relief rally in the U.S. dollar and send this pair soaring. Also, keep an eye on crude oil prices for their influence on the loonie. So to recap, watch for a hold above 1.4000 for a bullish signal, or a break below 1.3980 for a bearish one. Please remember, this content is for informational and educational purposes only and should not be considered financial advice. Trading involves significant risk, and you should always conduct your own research before making any decisions. Thanks for watching Explain the Charts. If you found this analysis helpful, please hit the like button, subscribe to the channel, and we'll see you in the next video.